and then what happens? Boom, it's up through the roof. So silver, I think, is a very interesting situation, and I really do think it's rather like owning gold on steroids in a sense.
Mhm.
What I can tell you is that it takes an awful long time to get these things through. Um, Mining is a dirty business. And in these days of environmental considerations and all the rest of it, I mean, there are not many places in the world where you can actually open a new mine of anything. Um, I mean, Chile, yeah, you can do it there, I suppose. Mexico, you can probably still do it, though I think things are getting rather tight there. Um, Existing mines, fine, but new ones, yeah. And I think the other problem with silver is that I don't know the exact percentage, but I have a figure in mind that something like 56, 57% of mine supply is by mines whose primary product is actually another metal. So this is a byproduct. And what this means is that the emphasis in terms of capital investment and all the rest of it is really directed at other minerals rather than silver itself. On the usage side, they keep on finding new uses for it. I think one thing I would refer you to is the invention by Samsung of a new EV battery, which lasts for, I mean, it can charge very quickly. It lasts for, it's got huge mileage potential and all the rest of it, and is likely to become the standard, if you like, for the next generation of, electric vehicles. I mean, and this is silver, heavy silver dependent. Lithium is not really significantly involved. I don't know the details, but we do know that this is using a lot of silver. And this is against a background of 4 years so far of supply deficit. That's according to the Silver Institute. And I can see with the disintegration, if you like, in the economic situation leading to higher gold prices, silver going up on the back of that, won't be very long before you find that institutions, serious money, will start, buying the ETFs again, and that means that the source of supply, which is seen making the swing factor, but covering this loss of um, uh, silver in the sense that you've got too much supply for too little demand, too much demand for too little supply. I get it the right way around. Um, you can see that this swing factor of drawing down on investment stockpiles is going to go the other way. And then what happens? Boom! It's up through the roof. So silver, I think, is a very interesting situation, and I really do think it's rather like owning gold on steroids in a sense.
Mhm.
I mean, it's volatile. Don't get me wrong. When gold stops moving, just stops moving without even going anywhere, that's the point where silver tends to go lower, or has done in the past. But even then, I think the supply deficit situation is likely to catch up with it at some stage, and you could see genuine physical shortages in sort of beginning to really drive the price. I mean, that would not surprise me at all. No, I don't think it's that at all, John.
Hmm.
It's really quite simple.
Right.
Central banks acquire gold for monetary purposes. It is part of their reserves, and what they're doing is they're getting out of fiat currencies into real legal money. Silver does not really fulfill that function as far as central banks are concerned. If they do buy silver, it is because they might consider they're going to have to coin it at some stage. I mean, the days of gold silver ratio of 15, 16, whatever, I mean, forget it. That's gone. It really has gone. Silver, I think, if we go back onto a gold standard, if there is a monetary role for silver, and it's if not, it will happen. If there is a monetary role for silver, it will be literally for smaller amounts of money. I mean, in the past, in this country, for example, only I think 40 shillings, which was £2, if you like, was legal tender. There was that limit on it. And I suspect that something like that would come into place if coinage returns. But of course, we don't know whether coinage will return in that sense, other than just tokens. I mean, basically, when a fiat currency defaults, it just loses value. It's as simple as that. As a matter of accounting, there always has to be debt on the other side of a fiat currency. So I think what is likely to happen, if the foreigners aren't going to buy debt, if the US institutions aren't going to buy the debt, then the Fed will have to buy it. So that's the way in which the government will be funded. But it'll be funded on the basis, really, of falling purchasing power for the currency, which means that even yet more currency would have to be introduced in order to cover it. And of course, when a currency starts going down, you've got to look at the interest rates. The interest rates, in order to stabilize it, just go up and up and up and up. I mean, in Russia at the moment, you've had recently a weak ruble. And what's happened? The Central Bank of Russia has had to raise interest rates, its overnight rate from 18% to 21%. Might have to raise it further. Slightly different topic, but you can see the relationship between interest rates and currencies is that the real role of an interest rate is to stabilize the currency, not manage the economy, which is the big mistake that central banks make. Well, if they cut interest rates, then they're going to weaken the dollar. It's as simple as that. So the first thing you'll see is that the yield curve goes strongly positive. In other words, the time value will come back in to longer maturities. And I think that the Fed's going to be in an impossible position. I really do. They won't cut interest rates very much. I mean, I can see that the market's discounting a cut of 0.25% or something, or 0.5%. But if that comes in, I don't think that there will be any more cuts. I think after that, there's only one way for interest rates, and that's for them to continue to rise. If the Fed tries to muscle them down, which it probably will do, because as interest rates rise, then the credit bubble, which has been building really since the 1980s, that will burst. And when that happens, equities will crash. Property, and you've already seen the start of that in commercial real estate, that will crash for even further. Banks will be getting into difficulty. Zombie companies, of which, I mean, I don't know how much zombiness there is in the US economy, probably about 30%. They're going to be going bust. So what does the Fed do? It's got to rescue the banking system. And it probably also means that it's, in effect, rescuing the entire economy, which demands lower interest rates or massive QE or